Hey everybody, it is Tom Sheehan of the Sheehan Real Estate Group of Compass here with a January of 2023 Happy New Year market report. Last market report was only just a couple of months ago, but things are moving pretty fast here and we're getting a little more information, and I thought it would be valuable to kind of better understand what's been going on the last couple of months and how things are looking as we move closer and closer to the upcoming spring market. And if you don't want to stick around for the whole video, here's the too long didn't watch version. Despite record low new listing inventory from the fall of 2022, today we have dramatically more inventory than we did a year ago. Days on market is up around 15%, and the sale price to list price ratio is down around 3.5% from where it was last year. And while the median sale price of a single family home in the greater Boston area remained around the same in September, October, and November of this year when compared to last year, based on my initial review of the numbers that isn't official, I expect the year-over-year median sale value of a greater Boston home will have declined in December when compared to the year prior. It's not going to be much, but it's something that we haven't seen in a long time. And if there's a sign that we might not have a dramatic correction in home prices, it's that as we sit here in January of 2023, the mortgage interest rates have settled down, sitting around low 6 to mid 6% range, and haven't ticked well beyond that 7% range is what we were afraid of when we last spoke in early November. So digging into the numbers. So if you remember from our November report, I was talking about how the new listing inventory had been as low as it had been in almost 20 years for new listings of single family homes in the greater Boston area. Well, the trend continued through November and December, and we saw around 19% fewer new listings in the months from September to December in 2022 compared to 2021. And the number of new listings was far dramatically lower than we had seen in the last 5 years. But despite that limited number of new inventory, the overall number of homes listed on the market remained about the same for this November of this past year compared to the year before, and the same appears to be the case for November. So what that tells us is, despite not getting new listings, the existing inventory has remained stagnant and sitting on the market. As a result, the days that it takes a home to sell is up 15% at the end of this past year when compared to the year before, and the sale to list price ratio is down 3%. And as I noted a little earlier, and while we don't have the exact final official figures, based on my research, I think we will see that in December, we had the first year-over-year decrease in the median home sale value of homes in the greater Boston area. I don't think that number is going to be a dramatic amount, maybe probably around 1 to 3%, but that is not something we had seen in quite some time. And the biggest cause of this shift is really the interest rates, which we've talked about in the past. When we last spoke in early November, rates were hovering around 7%. The concern was if it broke past that 7%, that we might see it get up to 8, 9, maybe even 10%. The good news there is rates kind of bounced off that 7% and now have settled in that 6.25 to 6.5% range for a 30-year fixed loan with 20% down. That stabilization of interest rates is good for the real estate market. It allows people to have a little more certainty when they're making their decisions to whether to buy, sell, or invest. And the consensus that I'm hearing from mortgage rate experts is that we can probably expect stabilization to continue, and there's even some reason to believe that rates could start coming down when you consider some factors that people pay close attention to, specifically the spread between the 30-year mortgage interest rate and the 10-year Treasury note rate. So from that standpoint, it's a relief that for now, we don't have to worry about interest rates getting far beyond the max range that we had seen, which was 7%. So the big news to report now is really that decline in the median sale price. It was pretty inevitable given that we have had the very high interest rates, but the things that were leading us to have a little doubt was just the significant decrease in the new listing inventory that we were seeing. So we was curious if we were really going to see that accumulation of inventory really to push down those prices. But as the inventory numbers show, even though we haven't had a lot of new listings, the number of homes that are available to sell basically because other old listings have continued to languish on the market, we are finally seeing some pressure on prices to come down. The next question is really, how long will it last? In the greater Boston area, the northeast region of the United States, we're a very seasonal market, and the months between January and March tend to be the absolute slowest months for new listing inventory that we have at any time of year. So historically speaking, you're usually looking at around 20% fewer homes listed between January and March than you would have seen between September and December. So if the last quarter of 2022 is any indication, we're going to see very, very few homes listed for sale in the first quarter of this year. And if we're going to have so few homes for sale, how much downward pressure on pricing can there be? Especially if we have continued stabilization of interest rates or even maybe a tick down in interest. Once these December numbers come out, I fully expect there's going to be a lot of talk out there of an impending housing crash, people talking about the housing bubble that occurred in the mid-2000s. I still expect that to be really unlikely, especially if interest rates stabilize, and especially here in the greater Boston region. Even nationally, if you compare right now where our national economy is compared to then, it's completely different. During that last housing bubble correction, as a nation, we lost 8 million jobs. The current job market in the United States is very strong. We have 20 more million jobs today in the United States than we did at that other housing crash time period. During the last home crisis, there are subprime loans, those loans that had adjustable rates that were going to make people's loans virtually unpayable, represent a very, very small portion of the overall mortgage market. The total numbers of homes for sale back at that last housing crisis was almost 4 million homes total for sale. Currently, we only have 1 million homes for sale. And at the time of the last housing crisis, nearly 10% of all mortgages were in delinquent status. And today that number sits around 3.5%. So while mortgage interest rates are certainly going to have an impact on the overall market, the other economic factors that generally are going to weigh in on the housing market status are really healthy and much different than the last time we saw a major correction in home values. That being said, it's not the worst time to be buying, especially when you consider the last couple of years, at least from the standpoint of having contingencies and being able to properly vet and do your diligence on a property. While you'll still probably be spending more for a home this year than you would have 3, 4, 5 years ago, almost certainly, and your interest rate is going to be higher than it was the last few years, I expect buyers to have more time to vet properties, not have to deal with as many multiple offer situations, and more likely be able to have contingencies like home inspection contingencies and mortgage contingencies, which can provide a lot more peace of mind in the home buying process. So I hope you found that helpful. I hope you found that informative. As I always say, everyone's real estate and living situation is unique to them. I'd be happy to discuss your situation, even if you're not thinking about a change for another year or two, and come up with a strategy, what your best approach would be based on your needs and your circumstances. So give me a call, shoot me a text, or send me an email. Thanks for watching. Talk to you soon.